was up at the time, so I checked on the open, and I'm like, order's cancelled. Then I put it on, and it dropped down to 4.
Yep. Morning, everyone. Welcome to this morning's edition of the NPC Markets Morning Call. 14th of April, 2026. Stocks raise all losses and memory of the Iran conflict. In a scene reminiscent of the Men in Black, just wander up and everyone forgets. So we've got the attacks back up to roughly around the halfway to the average mark. I've added a little bit of new data into this, but I mean, whether it's relevant or not, or whether the market just continues to go higher is a different matter. Apparently, logic's not really a tool that we need to use these days. So since the cumulative shock of gas at the pump for the US economy. Basically, since the start of the conflict, if we use that figure of 41 odd days to normal, and bearing in mind that there's no ceasefire coming today because Trump's blockade starts today, the Iranians have threatened to heavily retaliate. So it'll be interesting to see what actually happens there. All the US media is reporting on is Iran wants to do a deal, but yeah, what they're saying is the opposite at this point in time. But basically, if we go back to normal, what it's costing us per day, we're looking at a cumulative cost around about the $25 billion mark to the economy by the 27th of May. And then, and I've just done a little comparison here. If we were to raise rates by 50 basis points, with the US consumer and personal debt at somewhere in the well into the trillions, it's actually only less than half of what the cost of this gas is. So I mean, this is almost like the Fed hiking 1% in interest rates. So it's certainly, I'm really interested to know how the equity markets have how equity markets have generally just decided that this is going to have no effect, even if it is wrapping up. I mean, there's one thing being optimistic, and then there's another thing being in denial. So yeah, look, broader strengths overall. As you can see here, I think they're taking a lot of the defensive names have been, have taken a bit of a hit versus the more growthy names overall. So that's just it's a general switch back to risk on. We're actually up now since the conflict started. I mean, let's sort of forget the fact that we've got tariffs having to be refunded. We've still got things going on with the Fed. We've still, obviously the consumer budgets are being taken up. But as I say, what I guess the large section of the market here, which is, I suppose, unaffected. But look, I mean, this is going to dent companies' budgets. This is going to dent consumer spending, etc. And, is going to be a significant cost to the economy overall. Not to mention, the extra money that the US government has to spend on defence and funding this whole conflict. So it'll be interesting to see how this sort of plays out. We've also had reports around 50% of all of the announced data center projects from 2025 have either been public announcements of delay or cancellation as well. So that you can, one or two camps, I suppose, is that you can say that can damage the AI thematic, but you can also say that the market was really concerned around capex and not getting their and not getting instant results out of AI for that extreme spend, but essentially it's all around switches, memory, and componentry really, and power. It's not necessarily around any sort of slowing in AI. So And we do have tonight we'll have the Fed and Treasury Secretary Bessent meeting with the major heads of the banks, talking Anthropic and talking about them having to respond as they've identified it as a potential security risk. I think the major bounce back here in these names, in the names towards the middle of the heat map there, which are in dark green, is probably pretty relevant, because if the regulators start pumping the brakes on AI, these software companies are going to have a fair bit more time to pivot, and they've been hit quite significantly. So we're up around about 5%. All the technicals back to strong buy. It didn't really take very long overall, but yeah, and we've got the SPY, around the I think it finished at 9,070. So we are extraordinarily close to record highs overall, and it doesn't. I mean, I think this is probably a bit of a short squeeze overall, but I mean, because it doesn't make a lot of sense in terms of the economic damage this has caused, and there is talk that the Iranians via proxy with the Houthis in Yemen will try and close the Red Sea as well, but we'll see how that plays out over the course of the day. And more importantly, is one thing we've learned out of this conflict is whether it's reported or not. So these things can sort of go back to some form of normality, pretty quickly, as we saw with Russia, Ukraine, in terms of oil prices. But I think with those sanctioned oil from Russia and then the Middle East being affected as well, and if the Red Sea was to be closed at that strait, the southern strait of the Red Sea, we're talking 30% of the world's oil supply. So and we asked it, as I say, till about 42 days back to normal if it was to open tomorrow. There's reports of the Iranians have lost naval mines, whether they're just saying that or not, but the strait will need to be swept as well. That even came out of the US camp, that it could take at least 2 months to have full capacity and safety, even when they come to a deal. So it'd be interesting to see how this plays out overall. But just broad bounce backs and everything except crude. Crude was still up. We're still around that. We're still around that sort of $100 mark. I did notice that now that Brent is trading lower than WTI crude, the US media has switched to quoting Brent because it's the lower price, which is an interesting shift there as well. But I think we're around about the 90. It's dropped a couple of percent in the aftermarket. I think we're around about the 97 mark. So overall, oil's still pretty high. We've got bank earnings coming up. We've got Goldman Sachs, we've got JP Morgan, Wells Fargo, Citigroup, Bank of America, Morgan Stanley, and we've got Netflix towards the end of the month. Be interesting to see Blackstone earnings on Friday as well. They've shut redemptions on their funds, etc., which could prove to be a stroke of genius to get ahead of it early on those private credit deals that they're involved with. That was one thing as well that that Fed Chair Powell's asked for the banks to bring along to their meeting around the AI threat, which will happen in the next 24 hours. Is he's asked them all to bring their individual exposures to private credit as well. So whether that is just him doing a health check, or whether there is genuine concerns there, I guess we'll find out overall. But yeah, we're it's very. I mean, either oil's going to have to come down, or the equity market's going to have to come down at some stage. Which one it is, I mean, who knows? Guess it'll depend on how things go. Trump's picking fights with everyone, from the Pope to Iran, Hezbollah, etc. Like, it's been he's running some pretty heavy distraction, which is part of the general tactics. And yeah, it'll be, as I say, we're still very surprised where we are at the moment, but still pretty happy basically to be reviewing portfolios, because it really does. It would surprise me genuinely to see see this market remain here and bust up to record highs. It's not just the Iran issue. I think the Iran issue compounds a bunch of other broader issues as well. So yeah, it's probably still seeing it as more of an opportunity to be selling into this rather than scrambling to buy and falling victim to FOMO. We'll probably see how these earnings results come through, because they will be a little affected by by this rise in gas prices for at least a month, and then business expectations and outlooks moving forward. We even saw Westpac make start to ask for bank some extra liquidity. They made an announcement today because they're fearful around the effect that fuel prices is going to have on consumer budgets and their ability to afford their loans and their mortgages, etc. That pretty much wraps things up for today. We will speak again tomorrow.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.